All right, let's be real for a sec. Net asset value. It doesn't exactly make you jump for joy, does it? But hold on. Because behind this kind of, well, dry term is something super important for understanding how those investment funds actually work.
Yeah, not exactly a party starter, I'll give you that. But really, NAV is all about like being in the know and making sure you're getting your money's worth.
Exactly. It's like that aha moment when something finally clicks.
Yeah.
We've all been there. But for those of us who haven't had that aha moment with NAV just yet, could you break it down for us? Like, what is it really?
Well, at its heart, it's like taking a quick pick of what a fund is worth at a certain moment. So imagine like taking everything the fund owns, all the stocks, bonds, you name it, adding it all up. Then you got to subtract any debts or expenses they have, and boom, what you're left with is the net asset value.
So it's kind of like when you're moving and have to make an inventory of all your stuff,
Mm-hmm.
except instead of counting furniture, we're adding up stocks and bonds.
You got it. And just like knowing how much all your stuff is worth can be helpful, understanding a fund's NAV gives you like this key insight into its value.
That makes sense. Now, I've heard NAV is a big deal when it comes to mutual funds. What's the connection there?
Right. So mutual funds take money from a bunch of different investors to buy, a whole mix of different assets. Think of it like a big fruit salad. Yeah. Each fruit is like a different investment.
Okay, I'm following. So the NAV of the whole fruit salad tells me the total value.
Exactly. And because those fruits, the investments, their value can change every day, right? So NAV gets calculated at the end of each trading day to keep things up to date.
Makes sense. So when I buy into a mutual fund, it's like I'm getting a portion of that fruit salad at its current NAV.
Exactly. That's the idea. Keeps things fair and transparent for everyone involved.
Okay, I get it. But how do we actually calculate NAV? Are we talking like crazy algorithms and a million spreadsheets?
Actually, it's way simpler than you might think. It's just assets minus liabilities, remember? Let's say a fund has $10 million in stocks, $5 million in bonds, and then another, say, $1 million in cash. That's $16 million in assets total. Now, they also have maybe $1 million in operating costs. You subtract that, and boom, you get an NAV of $15 million.
Okay, so far so good.
Yeah.
But what's this I hear about per share?
Ah, good question. That's where we got to divide up our fruit salad. To get the NAV per share, you just divide the total NAV by how many shares are out there. So let's say our $15 million NAV fund has 1 million shares, right? Divide those two, and you get an NAV per share of $15.
So if I wanted to buy a share of that fund, it cost me $15. That does seem pretty straightforward now that you put it that way.
See? Not so scary after all. And that's the beauty of NAV. It's all about being transparent and helping you make smart decisions with your investments.
This is already way clearer than the first time I tried figuring it out, I have to
Yeah.
admit. But there's got to be more to it, right?
Oh, absolutely. For example, we haven't even touched on how this all works with the different types of funds out there. Like, there's this big difference between open-end and closed-end funds that, well, it really changes how NAV plays out. But you know what? I think we should save that little nugget of excitement for next time.
All right, you had us hanging there with that open-end versus closed-end funds thing. What's the deal with those?
Right. So, we've been talking about mutual funds, and most of those are what we call open-end.
Okay, so what does open-end even mean?
Good question. It basically means they're always like issuing new shares and happy to buy back the old ones.
So anyone can buy in or cash out whenever.
Yeah, think of it like a restaurant, right? With one of those all-you-can-eat buffets.
I like where this is going.
So people can join, buy shares, or leave, sell shares, whenever. And the price they pay, well, it's based on what that buffet costs per person at that moment, which is basically,
NAV?
bingo! You got it.
Makes sense. The fund manager, they got all the ingredients, the assets, right? So it's easy to figure out a fair price per share.
Exactly.
Okay, but then what about these closed-end funds? Are they like this super exclusive restaurant with a years-long waiting list?
Haha. Kind of. Imagine, instead of that endless buffet, this restaurant, it has a set menu and a limited number of each dish.
Okay.
So each dish, that represents a share in the closed-end fund. Now, here's the thing. Each dish has a set value based on what's in it, the NAV. But people can buy and sell those dishes, those shares, on the open market.
Wait, so someone could pay more than the NAV for a share? Like bidding on a fancy dessert at a charity auction?
Exactly. That's the key difference. With closed-end funds, it's all about supply and demand.
Wow. So even though we know the actual value, the NAV, the market can make things, well, unpredictable.
For sure. Think of it like a rare comic book. It's got its printed value, but collectors might pay way more because it's, in mint condition or super rare.
Okay, that makes sense. So with closed-end funds, NAV is important, but it's not the only thing that dictates the price.
Right. You got it.
This is making me hungry and making me want to check my portfolio.
Yeah.
But before we get too sidetracked, let's talk about NAV and how it shows how well a fund is doing. I mean, can we even tell how a fund is performing just by looking at its NAV?
That is the million-dollar question, right? Because there's this myth that a bigger NAV automatically means a fund is doing amazingly well. But remember those income payouts we talked about, like dividends? Those actually make the NAV go down, even though they're good for the investor.
Right, right. It's like our fruit salad again. Selling some of the fruit makes the whole thing worth less, but now I've got delicious fruit to eat.
Exactly. So to really know how a fund is performing, you got to look beyond just the NAV at stuff like total return and KGR.
Ooh, those words sound familiar. But maybe give us a little refresher. Why are they so important?
Right, so total return, that gives you the full picture. It includes both the change in NAV and any income payouts you've gotten. Like, it measures how much the fruit basket is worth and how much fruit you actually got to take home.
So total return is kind of like the what's in it for me number. I like it. What about key GR?
So key AGR, that stands for compound annual growth rate. It basically tells you how much your investment has grown on average every year.
Ah, so it's like a long-term view, which is what you want if you're thinking about, retirement and stuff.
Exactly. It cuts through all the daily ups and downs and gives you that clear picture of how things are really going.
This is all making a lot more sense now. I feel like I'm actually getting the hang of this whole NAV thing. But I have a feeling there's still more to learn, right?
You're right. NAV, it's a great start, but it's just the tip of the iceberg. There's a whole world of investment knowledge out there. But we've covered a lot of ground today, don't you think?
Totally. We've tackled open-end and closed-end funds, looked at how NAV connects to fund performance, and even reviewed some key metrics. I feel like I could actually hold my own in a conversation about this now.
That's what we like to hear.
So we've really dug deep into this whole NAV thing, explored the ins and outs of mutual funds, and even peeked into that world of closed-end funds. But for someone who's listening, like, what's the big takeaway? What's that one thing they should remember about NAV when they're out there making their own investment decisions?
I think the biggest thing to remember is NAV is just one tool in your toolbox, not the whole toolbox itself. It's super helpful information, don't get me wrong, but there's a lot more to consider when you're making investment decisions.
It's like they say, don't judge a book by its cover, right? One number, even an important one like NAV, can't tell the whole story.
Exactly. A smart investor, they look beyond just the numbers. They want to know what the fund actually holds, what their strategy is, and how it all fits in with their own goals and, how much risk they're comfortable with.
It's kind of like planning a trip, right? You wouldn't just pick a place based on the cheapest flight.
Right.
You think about, like, the culture, the experiences, what you really want out of the trip.
What a great analogy. Investing is about more than just chasing numbers. It's about being a part of the market, supporting companies and ideas you believe in, and growing your wealth in a way that, feels good to you. NAV, it's a tool to help you get there, but it's not the only one.
Well said. This has been a really eye-opening deep dive into NAV. I hope everyone listening feels a little more clued in, a little less overwhelmed, and way more ready to make some smart financial moves.
I couldn't agree more. Knowing your stuff, that's powerful. And understanding stuff like NAV, well, that can make a huge difference.
Now, for those of you who are ready to take it to the next level, here's something to think about. If you could see inside any mutual funds portfolio, which one would you choose and why? Something to ponder until next time. We'll be back soon with another deep dive into a topic we know you'll find fascinating. Until then, happy investing, everyone.